Good morning and a very warm welcome to Fortuna's annual seminar 2020. On behalf of Dinesh Agarwal, our managing director, and our entire team at Fortuna, it is an absolute pleasure hosting this event. We've got 4 presentations lined up today, this being the first topic, which focuses on the path to business recovery. Now, the topic, as you will agree, is quite contemporary, given the effects COVID-19 has had on us, on our economy, on our families, our future, and in general, the way we look at life. So for all those who don't know me, my name is Melvyn Gilbert, and I work as Associate Director at Fortuna. My job basically entails working with business owners in the areas of strategic planning and business advisory, financial control and compliance, mainly the tech side of things. That's a photograph of me working at the same office from where I'm broadcasting today. So my key interest is small and medium-sized businesses, which are predominantly what I deal with, Western Australian economy in general, and Asian engagement. Now, I'm sure most of you are already aware of what we are as a group, what Fortuna is, but just as in a nutshell, we are a multidisciplinary practice specializing in tax and business advisory, legal services, financial planning, and mortgage broking. Now, amongst our various achievements, I would like to particularly mention the Australian Accounting Awards, which we won in 2020 for Boutique Firm of the Year 20 and over employees. Our client base is quite varied, ranging from mom and dad businesses and high net worth individuals to ASIC listed and Australian subsidiaries of multinational companies. With that, a small disclaimer before I start. The presentation is purely for educational purposes, and a lot of your understanding will rely on the perception that you have about business. Now, unfortunately, I have no control over that, but in all honesty, I've been as objective and succinct as possible. So, coming to the topic itself, business recovery suggestive plan, suggestive actions. So what is the relevance of the topic? From left to right are 4 photographs which explain how our world has changed in the last 7 months. Not so much in Western Australia as yet, but the rest of our country is grappled by economic hardships, a recession, first time in 28 years to say the least. Now, the governments, both at the federal level and the state level, are taking measures, but honestly, it is still uncertain of what will happen once the government handouts stop. It is a concern, I'm sure many of you, who have logged in today have as well. And I certainly do, because I see small businesses on a daily basis and I work with them. So I see what the changing dynamics are. And that is concerning. That is something which we are worried about. And that is probably the biggest fear, as they say, the human truth. The biggest human truth is that the fear we have of the unknown. We like it when we know it, but when we don't know what is out there, we are often scared. On the brighter side of things, I would like to reiterate what Dinesh said in one of his presentations back in April. Anything that doesn't kill you makes you stronger. And the fact that we are all logged in today simply means that COVID hasn't killed us. So stronger we definitely are. Because really, other than the bad news that this virus has brought in from practically every corner of the world, there's also a lot of good things that we learned in the past 7 months. The good things, if we use it well and to our advantage, will help us build a more robust future. And really, pre-COVID-19, Western Australia wasn't doing all that great either. Therefore, we just can't blame it on the pandemic. In fact, our economy seems to be doing a little better than what we were doing prior to March 2020. Hardships are therefore not limited to such pandemics. It can be a result of a number of factors, some of which are within our control, and some of these factors are not within our control. If you look at this diagram, you'll realize that the factors which are not within our control, we often refer to as external policies, external factors, such as, say, for example, a trade war with China. And then we've got some internal factors, say things like IT policy or training of staff or alike. Now, each of these policy factors can affect our business. Sometimes it's purely the external factors that affect our business. Sometimes it's purely the internal factors. And sometimes it is just a combination of a number of factors which might fall either in an external space or in the internal space. But how do we figure out that our business is struggling? Now, theoretically, any business gives adequate warnings before it goes belly up. It is really up to the owner to heed these and take corrective actions from time to time. Now, in some cases where warnings are more critical and it is beyond the entrepreneur's technical understanding of the particular issue, that's when you need to pick up a phone call with your accountant, because that's what accountants are specialized and trained for. Now, look at this slide here. I have sourced this from this list from CPA Australia. It's a list of early warning signs. Now, if you see, it lists poor cash flow, changes in customer behavior, weakening financial position, and not being up to date with compliance as the 4 most important early warning signs. Now, if you read the bullet points carefully, you'll notice that these are very closely interrelated. And really, if you come to think, there are businesses, perhaps yourself at some point, who have either gone through or are going through these challenges, not being able to pay creditors on time, losing clients because of poor work ethics or poor work delivery, declining sales, declining profits. And most commonly, when things start going, showing early signs of hardship, the business owner often stops paying themselves, hoping that it would actually ease the cash flow. But no, it does not. It really adds another layer of worry as it affects the person's personal affairs and person's home. But then these are issues that 90% of Australian businesses have experienced at least once in their lifetime. So as an accountant, I do not find this embarrassing at all, because these issues are rectifiable quite easily. Yes, and when I say easily, I don't mean, I do mean strategically easily. And that's what we will cover in this presentation today. But then there are certain warnings which are quite critical, as it involves legal issues such as not being able to pay rent or, say, salary, or sometimes using the PAYG money from your employees or their super guarantee charge money to actually pay your business bills. These can have serious consequences. So when you have these, it is important you stop trying to fix it yourself and call your accountant. Now, just give me a quick second. Now, I have some suggestive approaches to deal with difficult times in business. And this approach is relevant with or without COVID. In a nutshell, I have broken it down into 3 main strategies: business, financial, and expansion strategies. And of course, there is a 4th strategy, which is risk management, which pretty much sits across all these other 3 strategies and is quite relevant at all times through the business's journey. Now, broadly, business strategies include internal and external factors. As I've touched upon before, internal factors are something within your control, while external factors are not within your control, but nonetheless, they affect your business in a big way. And there are many models which strategic business planners and analysts use to study these 2 environments. And I will give some of them to you later on. But unless you gather the knowledge through these analyses, you cannot set what is a realistic goal. You simply can't. Because if you set a goal without the knowledge of what is out there in the market or what your capabilities are, then it is not really a business goal, it is a daydream. And I agree when they say great people are often daydreamers, but as an accountant, my job is to make sense of numbers. So I'm not being philosophic here. Besides, about 70% of these daydreamers, and they go down within the first 3 years of starting up the business. So that is not something we as accountants wish for anybody, whether our clients or anybody else. Then we've got the financial strategies. Because without money, whatever business strategies you want to have, you just cannot give effect to it. Therefore, this becomes equally as important, or perhaps a little more important, to start with. And it is only when you have a holistic understanding of these two strategies that you can proceed to expansion strategies. Now, how you will expand is something that will evolve from the knowledge that you have gathered from the environmental analysis and how much funds you have through financial strategies. So I hope this makes sense, right? But before I go to the next slide, there is something that we often tend to miss when discussing business. It's what I call the personal health and well-being strategy. Now, in recent times, this is becoming more and more important and increasingly integrated in the overall scheme of things. Now, let's have a quick look at business strategies. It is important to know where you are to know where you can go. So adopting a risk management mindset is the key. The first step is to take stock. You need to identify and manage any weakness in your business or industry before trying to solve a problem or jump at a new opportunity. Now, understanding your customers and their behavior is fundamental, therefore. Their needs, their paying habits, sensitivity to pricing, their loyalty, these play a significant role in your business. Track your KPIs, be accountable to yourself and to the business. And likewise, ensure that your team is accountable. Working hard is otherwise futile because unless it is translating into business improvement, it does not make sense. In the next slide, I've actually suggested some KPIs as well, which you could download later on. We are recording this session, so you can download this later on. Now, coming to the third bullet point there, taking action based on direction and purpose. You should know why you are doing what you're doing. Because focusing on developing strategies, and that's what business owners should do. You should focus on developing strategies that actually increase your profitability. Because you can, in all honesty, make profits, yet be cash poor. So you've got to keep a watch over that as well. The fourth point there talks about change in your attitude towards doing business. Let it evolve. And we say this quite often, let it evolve. Because you don't know what is the right way, and every day is a new day in business. What you have always done may not be relevant anymore. So you got to look at innovative ways of doing business or solving a problem that you would solve otherwise in a different manner earlier. And as I said, don't just jump and start firefighting. Plan it well. Personally, you must be wondering, why I've got that coffee cup there. But personally, sometimes I have a lot of work pressure, and today's a Friday, so it's not as crazy as sometimes it gets. But it's sometimes as simple as just walking out and having that cup of coffee, then coming back and with a cooler headspace, target what really needs to be done. So that helps. Coffee, as they say, it's this photograph is from a brand which is called Cafe Coffee Day. It says a lot can actually have over coffee, and that is true. I agree. Now, here's a few KPIs which you could use for your business. You don't really need to copy these at this stage, because this presentation, as I said, is being recorded, so you can access these at any time later on as well. But they're quite handy and quite useful measures of how your business is performing. So what you could do is you could compare them with a corresponding period, sometime in the last year or sometime in the last quarter, and or also compare it with industry benchmarks with other organizations if you have some of their data. That will give you a good indicator of where it is. Now, as mentioned earlier, business strategists use many analytical models. So I've listed down some of these common ones which are done. But unless you're going through a full-blown business plan, it's really not necessary for you to actually do all these analyses. Just for a start, maybe just do a SWOT analysis. And it's important because especially after a crisis, you realize that you were so busy tackling one threat or taking advantage of one opportunity that on the other side, there's a number of weaknesses that have emerged over this period. Also, when you are doing opportunities and threats, consider the changes that have come about as a result of this disruption or this pandemic or something alike, which has actually brought this change. Like, for example, until the beginning of this year, we really didn't think we could go entirely on a work from home model. But we did, as a country, we did. And this transition has helped everyone get connected on virtual platforms, such as today. Now, in the traditional world, we would gather at one place and deliver the session. But today, it is not unusual to be sitting somewhere else and logging in. It is this, that will lead to an opportunity that can be actually used. And I see this as an important step anyway. So I think in what I'm trying to say here is take advantage of all the good things that we have learned and we have done over this last 7 months and try and create the opportunity that we can have. Also, revise your marketing plan. Now, there are many experts out there who want to assist with marketing, but let's be honest, you need money for such activities, and focus, therefore, should be very realistic and practical. Now, a recovery path, especially after hard times, means your marketing should be focused on sales that have a high margin and should be focused on getting the cash in your business more quickly. Things like changing logo color, for example, or fonts, or the look and feel of your letterhead, that should not be the marketing focus during these recovery times. Now let's move on to the financial strategies. Make your numbers work. And I think, this is the main element that we should focus on, other than, the previous two that I spoke about, of doing a SWOT analysis and revisiting your marketing. Now, focus to improve cash position. It is not the profit that determines business survival, it is cash. So without any doubt, prepare a cash flow forecast and track it regularly. Generate cash through sales, basically understand the contribution that your products are bringing and sell more high margin products and services. And try to get the cash in through the door as soon as you can. Maybe, give discounts if necessary for early payments. Also, I've heard a lot of businesses wanting to give discounts during this time. There is absolutely no need of giving discounts, especially if you have low margin products. Definitely do not give discounts on low margin products. Many of our businesses, our clients, and maybe some of you yourselves who are attending this event as well, have BDMs who work on a retainer and a commission basis. Focus on giving them commission on cash receipt rather than invoices raised. That way, you won't get drained out of your cash before cash comes in from the buyer. Then you've got the fourth point there, which basically, says take advantage of or full advantage of the terms of trade. There's absolutely no need to pay suppliers earlier than required. If the supply term is 30 days, then don't end up voluntarily paying up before 30 days because it's not necessary. Hold the cash as much as you possibly can. And I suppose the diagram on the left side, bottom of the screen, actually says a cash flow position, in a very gist manner. Now, many small business owners take drawings for their personal use from the business. Now, if that is something you can do without, just do without it. It'll help keep more cash in the business because honestly, personal expenses do not generate revenue. The money is better left in the business, therefore. And have your options open to take loans. Should you need more cash, you should have the option open to you. This means have your accounts in order, be ready to provide any information if the bank needs. Meet mortgage brokers, shop around a little bit. Because at the end of the day, if you need to grow and if you want to grow, you will need finances. Now, coming to increasing profitability, get financial statements prepared. Now, nowadays, many businesses use accounting software such as Sgro or Mile, from where you can extract the data in a matter of seconds. Now, provided, of course, your book is reconciled properly, otherwise it'll be garbage in, garbage out. Track your KPIs. You can always use the same KPIs I mentioned earlier. They're quite useful and quite easy to manage as well. Now, in your attempt to improve profitability, what is important is that you know which items generate the most profit, because unless you know that, you cannot concentrate on selling them more. And as I said in the previous slide, don't give discounts, of course, unless it is resulting in more revenue. But again, look at this table I've got here. On the topmost row in the blue, we have the margin that the business makes, say 10%, 15%, and so on, up to 40%. Now, if you were to cut the price by, say, 5%, and yet try to achieve the same gross profit of, say, 10% in the first instance there, you'd literally have to double your sales. Therefore, it's not really a good strategy to pursue. Instead, maybe focus on value addition, such as annual seminar, for example, like the one that we are doing here. Fortuna is not making money out of this. It is a value addition, right? So that is something which you can focus on as well. Now, this table is again something that you don't need to copy. You can refer to it later on from our recording as well. Cost control is another important method, and the trick is not to become a miser and criticize every cost, but to become vigilant and try to minimize it feasibly. Now, in order to do this, you need to identify the expenditure that are essential and look at ways that you can cut down on the non-essential expenditures. Sometimes innovation and processes can reduce significant costs as well. So one of the main ones, especially if you are in the trades business, is reviewing staff arrangements. It's a can I say it's a numbers game, and in order to make a call of whether you should offer someone a casual position or a part-time position, it needs some calculation. If you need this assistance, just give us a call, because we do this all the time, or speak to your accountant if you're not with us. Also, do your marketing, because that helps in bringing more revenue. But as I mentioned earlier, the focus of marketing should be on sales rather than brand building, especially at a time when the business is trying to recover from hardships. And most importantly, do whatever it takes to retain a good staff, because it is expensive to rehire somebody, replace somebody, not only in terms of recruitment fee, but also in terms of the time that is lost in allowing the person to settle in and being productive as desired. Data management. Now, this is another key to ensuring that you get paid for the products and services that you have provided. So how do you do this? In a gist, you should start with a debtors report. Pull this out from wherever whatever software you are using. Just pull this out. It's not overly complicated. Keep in close contact with customers, especially those who owe you money, okay, so that you know what is going on at the background. Negotiate if that helps, but try to get them to pay up as soon as you possibly can. Maybe get into a payment arrangement. Sometimes you can get into a payment arrangement directly with them, or there can be third-party providers as well, such as Feeling, for example. Also, if it is a new customer who's coming on board, do not feel shy from doing the due diligence of a credit check. It is not uncouth. It is quite understandable. As a client myself, I wouldn't mind. I'm sure you wouldn't mind, because and even if you did, I mean, as small business owners, every small business owner has the right to protect their business and be paid for what they have provided in terms of products or services. Inventory management is another key aspect of financial strategies. Do not unnecessarily hold up stock. It does more damage to the business than it does good. So sell the unwanted stock for whatever you get, whatever money you get. At least that way you will have more cash for other uses. Also, get rid of slow-moving stock or obsolete stock with stock that has a quicker turnaround. It is good for your business. And really, if you can correctly assess the volume of sales per item, then you can have a rather good inventory control, because you will know what to buy and when exactly to buy it. And very importantly, business owners often get very excited about discounts. So my straight up advice is, do not get excited. Avoid making a decision based on discounts that are being offered. So let that not be a deciding factor. And finally, we are quite on time here, because I was given allocated 30 minutes and we are on already close to 28. A few tips on improving sales. We have covered the first two already, first 2 points, whereby I mentioned, to chase higher margin sales. So just don't chase any sales. Be selective if you can, and promote what services you can get higher margins out of. So promote that, market that. Create value rather than offering discounts. Give more value-added services or products rather than just offering a blanket discount. And the last 2 points, I just simply want to say, don't shy from selling. I know we are not always the best salespeople in the world, and especially for people like accountants or lawyers, or someone in technical advisory. But that's where you take professional help from experienced BDMs, consultants, and you make that work, make them work for you. I think that pretty much brings me to the end of my presentation here. So I hope it was informative and you are able to use some of these tips successfully in your business. Of course, if we can assist with anything, just feel free to give us a call. In the meanwhile, I'm more than happy to take some questions. So Okay, so I've got one question coming in here. How does cash flow influence the success of the business in these times? Well, cash is king. Uh, it, as I said, in the presentation, cash is what needs. Um, First, you got to survive. When it comes to hard times, the key is survival. First, you survive, then you thrive. And cash is that component. If you have cash, you can make decisions. If you have the numbers sitting in your balance sheet, um, then you simply can't, because it's you need cash to buy stuff, make decisions, and that is really what you should have. So it is a big influencer in the business. How often should you review financial statements? Good question. Some businesses, it really depends on how prudent you are. So back in the days when businesses used to have financial statements prepared once in a year, and sometimes bigger businesses would have it prepared, say, you'd have interim financial statements being done every 6 months or sometimes even 3 months. But these days, with softwares like Sgro, for example, you can simply pull it out at any time. And if you look at these programs, most of these programs have um, variation analysis. So it compares your performance, the P&L performance, with performance of your P&L in the corresponding period last year, or say the previous quarter. And that will give you an indication of how well your business is actually doing. So it's not only about the financial statement per se, which is predominantly the balance sheet and the P&L, and know the gross profit, but it's also knowing the KPIs that you can achieve through the financial statements. So yes, very important. It is really depends on how diligent you are in terms of the business. We at Fortuna, we do it pretty much every month. Our business is a growing business, and we do it every month. So that, ladies and gentlemen, I think that no more questions coming up, which is quite. Oh, there is another one which has come up right now. What are your best tips to ensure liquidity? Well, I think we've already covered this at one of our slides before. So I will just go back to that slide once more. Don't trap. There's a combination of factors here. If you look at this slides here, do a forecast and sell whatever is unnecessary. There are certain times you might have assets which are just sitting there, like ducks and doing nothing, laying eggs, basically. So if you don't need them, just sell them, because then you can release some cash. And then, of course, try and pick up the money that from debtors as soon as you can, right? So that is very important as well. And again, cash flow management. If you see, the best way of being liquid is to turn on the tap for cash inflow as much as you can, so that the incoming cash is actually more, and the outgoing cash is less. Also, don't lock up a lot of money in stock. That is a very good way of remaining liquid. Really, don't unnecessarily lock up a lot of money in assets and stock. Be prudent about what you need in the business. Don't overdo things. Okay, so that brings me almost to close to 35 minutes that we have been into this event. I would like to thank all of you who joined us today, and we will take a quick 5 minutes or 5-minute break, and then I will have Nathan, my colleague from the legal department, who will be talking about sustainability standard versus testamentary trust wills.